The following program is paid for and presented by Skybridge Media, LLC.
I'm Anthony Scaramucci. Welcome to the new Wall Street Week. Today, we follow in this show's great tradition by bringing you one of the greatest investors of all time.
And I'm Gary Kaminsky. He is one of the smartest minds on Wall Street. And when he speaks or he tweets, we all listen.
What makes him tick? And how did he go from such humble beginnings to where he is today? And how is he going to help you make your money work for you? Please welcome Carl Icahn. Carl, we are so thrilled to have you here, Gary and I. I mean, we were talking about you before you got here, and we think you're arguably the best investor that we've ever met. Well, and but I want to go way back to the beginning. I want to go back to Far Rockaway, and I want to go back to that rough and tumble, humble beginning, and tell us a little bit about how you went from there to Princeton.
Yeah, I was the first one from my high school. That was a pretty tough high school. It's closed now. And I grew up in Bayswater, which is Far Rockaway, and it was a pretty tough neighborhood. But I liked the guys that came from reform school more than there was sort of two groups, middle-class Jewish guys, and then you had these real tough kids, and I got friendly with them. And so I was, my parents never thought I'd amount to too much. My father and mother, who had the first buck they ever made, not that they ever made much, but they came from the Depression. And they were good people and all, but they never took a trip. My mother worked 6 days a week. You know, she taught Sunday school. My father was an interesting guy. He was sort of an intellectual, and he wanted to be a Metropolitan Opera singer. He was obsessed with his voice, and he never quite made it. So he was frustrated. So he became a cantor in a temple, actually in Cedarhurst, where you lived, in Bethel. But here's the funny part of that story. He was a dogmatic atheist. So here he was a cantor, singing in a temple, and and then Yom Kippur even, he'd go out just because he really didn't like the people in the congregation. He'd go into his car that he hid a couple of blocks away and eat a ham sandwich, literally, during Yom Kippur, and then he'd come back and sing all those things.
You put cheese on it or no? A little bit of cheese on the hand or no?
Yeah, you know, I never found out because it's amazing that I got institutionalized with the way I grew up. And my mother's very strong personality. So they told me, look, the only way we're going to pay for your tuition is if you get into Yale, Harvard, or Princeton, which they figured they were pretty safe with because nobody ever applied from Far Rockaway. And I got in, well, I actually got into Princeton and Yale. My mother would boast her friends, you know, she was a school teacher, look at my son, I got in. But they were really worried about spending the money. And in those days, it was only $750 for tuition and $750 for room and board. So my father said, you know, son, I'm thinking about you, and I'm not going to go back on my word. I'd rather you go to Queens College, you know, because Queens was free, but if you insist on going to Princeton, we decided we'll pay the tuition. I said, great, thanks, Dad, I really appreciate it, but not the room and board. So I said, well, wait a minute, how do I live? How do I eat? He said, you're a smart kid. I've watched you. You'll figure it out. And I went down and talked my way into it. It was hard to get a job as a cabana boy. You're along that beach. It was very hard. You had to know somebody. I didn't know anybody, but I talked my way into it. And I got a job in Malibu Beach Club. And in Malibu Beach Club, I didn't know much about it, but, you know, I was a hustler. And I go, and there were a lot of young guys that were doing well then. You know, in those days, you're making 15 grand a year. They were all doing well. They were guys from Brooklyn. And they'd be there, and I was a good guy. I'd get them, if they wanted booze, I'd get them booze, you know. They wanted to meet the girl across the way, I'd go over, let me introduce you, you know. I was a fun kid.
Anthony, Carl, and I both were cabana boys.
We both lived near each other, but you had a better area. You came from slightly better.
But it was a great way. Bathing suit better than you.
Absolutely, but it was. I mean, Carl, that was an amazing way to. When you think, we'll get into investing later, but it was an amazing way to see how, if you thought outside the box, the way you handled those people, I'm sure that there was some connectivity years later in terms of getting outside of what everybody else was doing.
Yeah, no, I learned a lot, but the thing that I really did learn was they'd stay Saturday night and have this poker game. To me, it was a huge game. You could lose $1,000 or $1,500, you know, it was huge. And they liked me, so they'd say, hey, kid, come sit down, lose your tips, play with us. So the first time I played with them, I lost all my money that I made that week because I didn't know how to play. So I went. I read 3 books on poker. You know the books about it. These guys never read a book on it in their lives, and it's all mathematics. It really is. After reading those 3 books, I was 10 times better than them, and they were drinking, and I wasn't. So that made me 30 times
it's
better.
a big lesson to our viewers. You got to read, SATs, prep.
You got to
poker.
read and look into stuff and research and
Big lesson.
and really wait until you hit something. And every week I'd win, I don't know, $400 or $500, $300. At the end of the summer, I had $2,000, $2,000, and that's when room and board was only $750. And my grandfather upstairs, who lived upstairs, because my parents wanted to save money, so he would pay rent to my father. And he said, look, don't tell him you're making the money. That's what he thought. Don't tell him you're making the money. I'll hide it for you. So I give him the money. After 4 years, I had about $10,000 saved, and I paid my room. And to this day, I'll never know why my father and mother never asked me where I got the money to pay. They never asked me once, where did you get the money for the room and board? They just didn't care, whatever it was.
But when you're down there, did you fit in? Were you part of the mix there?
Different? I've never been part of the mix of anything. So
that's another good
I'm
part
always
of
been.
investing, though,
I tell you, I fit in more with the guys from the reform school kids than I always some sort of. When I got down to Wall Street, well, I went to medical school for a while. Need the whole background, but then I started going on the wards, and I'm a slight hypochondriac, not that bad. But after you start reading about each disease, you start thinking you have it.
You got every one of them.
And then I go down, and I'm in the tuberculosis ward. And, tuberculosis is really catching. I mean, it's very contagious. And this guy, I'm hiding, there's about 10 or 20 guys in this room, and this resident, he somehow picks me out, and he says, the guy's lying there and he's coughing. Little guy is coughing on this bed, and he says, Icahn, go over and give me a differential diagnosis. So I try to be funny. I said, well, it says TB up there. What do I have to go over there for? And he says, Icahn, don't be funny. This is medicine. And I said, okay. So I start tapping the guy, and he coughs all over me. And that's it. I said, that's it? I'm out of here. He says, you leave now, you're never coming back. I said, I'm never coming back. You don't have to tell me that. And I went downstairs. I made him give me every goddamn shot in the world. I knew what to give me. I insisted. They must give me 30 shots, before,
Sure.
And then I crossed town. I'll never forget it. I walked across for 34th Street on 42nd Street, joined the Army.
Wall Street Week. So Carl, let's switch to the markets. The data has been lackluster. The growth is slowing, yet the market seems to be continuing to go up. What are your thoughts on the markets? Are you worried here?
Yeah, no, I'm very concerned about the market. I think that you have a situation where this market keeps going up and up with 0 interest rates, and that's what's really pushing it. And yet, a lot of the economic news isn't all that good, and also, perhaps more importantly, earnings aren't good. So here you have a market trading at 17, 18 times multiples, the S&P, and you wouldn't buy a stock that trades at 18 times that you believe is going to have earnings go down 3%.
Is your portfolio set up for a correction?
Yeah, we're very hedged. We're extremely hedged.
Well, you have these very significant long positions. So what do you hedge? You hedge on the index
Yeah,
options?
you're making a good point. It's difficult to really do a great job hedging because we got these long positions. With Apple, you can't really hedge it that much, but I feel so secure with Apple, maybe I hope I'm not going to be wrong, that if it goes down, I just buy more, so I don't worry. But a lot of the companies, you're right, I hedge, and I tell you, there's ways to hedge, and this is where you do these derivatives, and it gets a little arcane, but what I really think is that's what's even more dangerous than the actual stock market is the high yield market. In other words, the junk bond market.
You see the junk bond market at a high.
I think it's
Jeff
ridiculously
Dunlop was on
high.
2 weeks ago saying the same thing.
Yeah, it's ridiculously high for a couple of reasons. I think default rates are going to go up in this market.
Spreads are going to widen.
And people buy it. I mean, this is what I'm talking about. The public.
Well, they're chasing the yield.
Well,
I'm going to try to put stuff out to tell the public what they should be aware of. I feel bad for them. They're buying the yield, and really believe. So you see all these high yield funds, money keeps going into them because you think, oh, the bonds are going to go up. When they start coming down, there's going to be a great run to the exits. And what is even worse is that even in '08, where, by the way, we made a lot of money doing just what I'm going to tell you I'm doing now. But in '08 even, you had a bit of a safety net because of the prop desks at banks. Today with the Volcker rule, you can't even make that investment. So there's no catching it. When these guys and these funds start running out.
And a lot of 401k money's in these high yield bonds.
And it's sad. I mean, pension funds, high yields shouldn't be at the level they're at. The high yield market going at interest rates only 3% against Treasury, above Treasuries. The spread, the credit spread is way too narrow.
They were called high yield bonds, junk bonds, for a reason. There's a lot of people, I think your point, Carl, is that the public doesn't understand when they're looking at rates at 0, when they think 5.25 or 5.5, for something that's a suspect credit.
But Gary, let's ask Carl a question for the average investor. If you had to send a message to the average investor, what else are you worried about, Carl? The pension funds are underinvested?
Yeah, but the pension funds might be too invested too, because if you see a market, these pension funds need 8% returns, 8.5%. Right, so they're running into the wrong stuff.
No, but I mean, they're undercapitalized.
I mean, they're undercapitalized, underinvested. But what if the market does really crash? I mean, people say it can't happen, and it's not going to happen. You're not going to have '08 again. I remember in '07, I mean, it's very similar. It's like deja vu. I was very concerned in '07, and the irony is that in '07, just like now, people all knew the housing bubble was going to burst, but everybody was thinking, well, wait.
You feel 15 is an '08?
Well, I'm not going to tell you it's going to be '08.
What about 16?
I'm not saying it's. I can't predict year to year. I think anybody that does is a fool. You can't really say I'm worried about next month or even next year. But you worry about the system and what's going on. And and then you say, well, what's going to really crash it like '08? And I remember in '07, in 4 days in '08, we made $1.5 billion because we put on those credit spreads. And we made it on a couple of $100 million invested because we had those credit spreads on. And I think they're right there again.
Are you hedging out the long portfolios by being short the junk market?
Short the junk market is, what I do is arcane. It's an arcane way of doing it.
But you're doing
you put on a credit spread. You do it, you buy CDS.
Correct.
You buy insurance in a way, and it's a little complicated. It's not hard to do it, but it's very hard to explain.
How did you get into, when did you start thinking about not just being an investor, how you define activism?
Yeah, you look at a company, and we look at the beginning, and you'd study it, and again, I'd spend 5 hours a night till 2 in the morning looking for companies, and you look at them and say, this company is amazingly cheap. It's got great assets. It was easy to do with that. Great assets, but they're not making any money. And then you look and say, why don't you make money? And you'd start talking to guys that understood the company better than I did. An analyst. He said, the reason, Carl, is that it's not great and doesn't have a great name, great this. It's the guy that runs it's an idiot. And he just shouldn't be there. So I said, why can't we get rid of him? So they said, well, how are you going to get rid of him? There's no accountability in that company.
Clubby board,
they're all buddies.
There's been this criticism. Larry Fink over at BlackRock put this letter to a lot of these CEOs a couple weeks back, and he said that this type of thinking is too short-term in nature. But I think you disagree with that because it's not short-term in nature.
No, but I don't disagree with him fully. But I get into what I think where I disagree with Larry Fink.
Yeah.
I agree that there are activists that really aren't what I call a true activist. These are guys that do pump and dump.
The definition of activism, your version of the definition.
I really think that the guys like us, called activists, that we go into a company and we do well for every shareholder.
Correct.
We make money for all the shareholders by cleaning the company up and getting on the board or whatever reason and saying you got to do this, this, and this. And if you're a smart guy, even the guys on the board sort of know what they should be doing. But hey, you got a guy in there. And that I wouldn't go into my metaphor for how these guys get there. There are some very, very good CEOs.
You've done a great job over the years explaining how those boards work.
How that boards work.
Yes.
Hey, But yeah, I want to make it clear for this program anywhere that there are very good CEOs I respect greatly. I mean, Tim Cook is a great CEO.
The people that are not defining activism the way you are.
So, okay, let me get
people that
back
are going
to
into the
Fed.
companies for the short term.
Yeah.
What are they? Who are they?
Let me say where I do agree with Larry Fink. That today, and it gets me angry, there are guys that go in and say, we're activists. And they got some money, they raise a little hell, they go out in the newspapers, you know, the good, you know, the guys, the charismatic guys that talk on some of these programs. Oh, XYZ, we're there, and we want to see that company sold, and we ain't going to rest till it's sold. Stock jumps 5 points.
They sell the stock.
Pump and dump.
Right.
And that's to be despicable.
Right.
And by the way,
agree.
and then they do worse. To be worse, then they say Icahn's buying it, which I'm never even in it. I never got close.
Yes.
Icahn's buying it. Right. And I hate telling, they call me up from all these programs and say, are you buying it? We hear you buying it. And I don't like to say what I own, but now I say it. I like to think of things, Tony, like a no-brainers. When you really get involved in the market, market's an art, not a science. And you build certain instincts, I think.
Yeah.
It's almost like a tennis player. You didn't ask Sampras, why did you go this way? How did you know the guy was going to hit it there? He can't tell you why. How does the open field runner, who's really great, run it down the field? Yeah. You say, how come you stop there and turn the other way?
It's instincts.
You can find certain deals where it hits you over the head.
Well, you said...
and you do those. And by the way, you do them, and part of it is that you know that if you can get, I mean, it sounds funny, but the company you buy, well, in the old days, you knew that it had a certain asset. You know what the asset was? The CEO, because if you got rid of him, the stock is going to go much higher.
Well, Carl, you mentioned Tim Cook, so you brought it up. You said Tim Cook is a good CEO, so I guess we should get that on the record. You're happy with Tim Cook right now?
We are back with the legendary investor, Carl Icahn.
Well, Carl, you mentioned Tim Cook, so you brought it up. You said Tim Cook is a good CEO, so I guess we should get that on the record. You're happy with Tim Cook right now? Think he's done the right thing?
Well, not right now. When we first bought it 2 years ago.
2013, you called it a no-brainer.
We called it a no-brainer.
You said it was a no-brainer.
We went on Twitter and said it, and I very rarely do that. And I met Tim Cook because at that time, there were guys calling me and saying, hey, we got to get rid of this Tim Cook.
Right.
And I met him, and I said, this guy's great. I had dinner with him.
And Steve Jobs put him in the...
And you've got to learn to have a feel for people.
Yep.
I said, the guy's a great guy.
So what was the gut feel? You met him,
the gut
your
feel,
impression
you
was
just
what?
meet with the guy, and after you talk to him, the way he came out talking to me at that dinner was, this guy, he lives this, he breathes it,
Heart's
he's
in the right
obsessed
place.
with it.
Same way you are.
Yeah, a little bit like me.
He looks at the Apple
He
products
lives
the
this
same
thing.
way you looked at the options book when you were running that options book.
Yeah, and he breathes it, and after you meet with him, guys say, you're not going to find a better guy.
So the stock,
Yeah.
Apologize for looking down. I want to get the actual numbers right. So when you first put that tweet out, 2013, the stock is up 96% since then.
And we haven't sold a share, and in fact, bought more.
That's
on the way
creating
up.
a lot of
you like
shareholder
it right
value.
now. You tweeted out recently. You like it right now.
I think, listen, I can't tell you what the stock is up a lot, even though it's going at such a low multiple. It's amazing how low. I mean, how do you justify
Probably the size, the
S&P?
market cap is probably hanging the multiple a little bit.
A little bit, and how do you justify the S&P going at 18 times earnings, losing 2% in earnings, negative? These guys are talking about, I forgot, 30% increase.
Yep, $200 billion in cash.
And when you take the cash out, it's 11 times earnings. It's absurdity. And I think it's one of the, every 50 years you get a company like this that has everything going for it. It's like the old horse. I remember Secretariat went into Belmont by 30 lengths.
73,
73,
right?
73. 30 lengths.
Yep.
I went around and I bet in every little parlor on it, $2, $5. But I tell you something, that this is like Secretariat. Now, hey, can something happen? Yeah. I mean, look, this is not a game where you can't lose. And I'm not telling you Apple can't go down 30 points either. I mean, this happens.
You're just talking about some fundamentals.
Since 2013, it hasn't been a straight line up, but the company's delivered. Are you happy right now with the mix of capital allocation, the buyback, the growth?
Well, I'd always like to see bigger buybacks. Let's talk about Larry Fink there.
Yeah.
So there, he's wrong and he's right. There were certain companies that can't do buybacks. But
nature
where
of
he's
the business.
wrong,
Nature of the business.
But where he's wrong, or where people are wrong to criticize a buyback is where you have a mediocre CEO. Hey, take Motorola. We were Motorola.
Yeah.
So Fink would have said, Icahn's wrong to tell Xander to give back money. Xander went and lost $8 billion by building 18 operating systems. So the shell's better losing $18 billion or taking the money out. Take Navistar. We're on the board there. We were the guy built this goddamn contraption. It's like the crazy uncle in the garage building this contraption for 7, 8 years. He blew $10 billion doing it. I can't remember the exact number. So Fink would say, oh, but you got to let them invest the money. Well, certain CEOs shouldn't be allowed to invest money. They shouldn't be CEOs. So he's wrong in saying, let's throw the baby out with the bathwater.
So the answer, it sounds like what you think is sometimes those that are just trying to do something in the short term, get the stock up, make an announcement, and then sell the stock.
Those are the
bad
so-called activists.
But those
and he's right about that.
But those that take a seat on the board, try to get the CEO and the other boards, the other directors to understand.
Treat it like it's their own business.
Yeah.
That's exactly
it's their own money.
Because the reason it works is because it's obvious. Because the system is dysfunctional. You can't get rid of these guys, and a lot of these guys, the most important thing in a company is the CEO, by far.
Oh, absolutely.
There's nothing close. And while
sets the culture and sets the leadership.
And while I don't believe they should get 750 times what the average worker gets, I don't begrudge him that money if the stock goes way up.
Yeah.
Because if he gets the stock up, let him have some good money. But look what you have. You got this clubby system, and you know what? A lot of them feel they can do what they want because of guys like Larry Fink, and I like Larry Fink,
right.
But because of these of index funds that really supportive, and Larry will say to me, oh, we really go both ways. But I can't remember one time, and maybe I'm wrong, maybe he'll show me, one time when they voted for us. Look, Larry built a great company, and he's a very smart guy, and I like him personally, and I agree with him, by the way, on the short-termism. In fact, I think he's right. There should be a penalty.
Right.
There should be a tax penalty, and I would back him on any reasonable thing he would say about it, but not about going in and saying, hey, don't ask companies to give back money. Certain companies don't have the ability to invest it.
So Carl, we want to play a little word association game with you.
Okay.
So we're going to say a word, and you just tell us what you think. So I want to start with the word energy, and what's your view there?
Problem right now, I think it will turn around 3 years from now, 4 years, or maybe sooner. But right now, it may go worse before better. And that, I hope it doesn't, because we own a lot of it.
Big positions in it.
Trait you most dislike in people?
Yeah, I think mendacity, the first word that comes to my head.
What about a big regret? Any big regrets?
As much Apple as I bought, I should have bought more.
From there to Barack Obama.
Yeah, well, with Obama, I know this will surprise you because I was really against Obama, but I think some of the things he does is okay. I do think, so now I'm on the opposite side again, because everybody in the Hamptons hates his guts, you go to parties, and I think look, I wouldn't want to see him president again, but I don't think he's terrible.
All right, but what about your parents? How do you think your parents would react today? You're one of the most successful people in the world.
They saw some of my success, and my father was touching. I still cry about, it still makes me cry for some reason. But in the late 70s, I was doing very well, and he never ever asked me what I did or how I did it. And I go to Florida to see him, and my mother, and he comes up, son, come here, and he never said. He takes a yellow pad and a pencil. Here, explain to me what you do, and I hugged him. I said, you finally admit it. He said, yeah.
Yeah, wow. It's a beautiful
That was
story.
touching.
But I want to personally thank you for the type of person you are and the role model that you've been to so many of us. Please welcome Carl Icahn. So how did the investing career start?
Well, then I got in with Jack Dreyfus on Wall Street. It wasn't tough getting a job. I went to Princeton, had good marks, and I did great. So I started thinking I'm really smart.
But why'd you go to Jack Dreyfus? Why'd you pick Wall Street?
Well, I knew
All the things you
somebody.
could do?
Well, I didn't know what to do, and I started studying how you pick stocks, and it really hit me how great it was. What you did. I met a guy that was a security analyst, and he's showing me how to pick these stocks.
Was it going back to the books? Was it reading things about the industry, or?
Well, no, I just liked it, but that wasn't really it. But when I got into Wall Street, I had 12,000, 15,000, which was a lot saved. I started investing it, And in '61, the market was hot, and you never really. I learned a lot from that, because you'd never confuse a bull market with brains. And what I did was confuse it. And I'm buying all these stocks. I'm picking this and I'm picking that. And I had a following of people would listen to me. Oh wow, well, but everybody was making money. You don't realize that. And Jack Dreyfus would tell me. He'd come over. He'd sort of like me. He'd sit there with me once in a while, and he said, "You're going to lose every penny you have. I'm telling you, Carl. Before you're through it," he said, "I got this." I was up to about $70,000, which was huge.
A lot of money back then.
He says, "You know what? When this is over, 6 months, a year, maybe less," he says, "not only won't you have the 70, you'll be negative, everything you ever had." And he was right. In 3 days in '62, they cleaned me out. I was it. And I learned. I tell you what I learned from that experience.
You didn't learn from him just giving you the advice. You had to go through the pain.
You had to go through the pain. You have to go through it. The market is not a gambling casino, and too many people, in this type of market, too many people think it is. And especially now with low interest rates. So it's really a dangerous place today.
How'd you build yourself back up, though, after the cleanup?
Well, then I had a few bucks left, very little, and I said I got to learn something. So I read a lot about puts and calls, and in those days that was really the Wild West, the puts and calls. And you had all these option brokers, if you remember, and they were fleecing everybody. So I was the honest broker, so to speak. I'd come in and tell everybody, put out a midweek option report, and I'd stay up every night calling people that write in for my report. And I'd be calling them from to California. And I had a big following in options. And I'd give them more than they thought they would get, which I couldn't believe. Here's a guy that I don't know from New York calling this wealthy guy, and he'll sell 10 calls on this stock, and I'll do it for $5,000. I get him $6,000. The guy couldn't believe it, right? Then I get him more. And the put and call brokers couldn't believe it, because they all wanted to give you business back. They said, "I know you can do it cheaper costs." And I built this thing up. By '68, I was making $700,000-800,000 a year, which was like today, 10 million, 20 million.
Where did the drive come from? Like, where
I always had it. You have to really have an obsessive nature, and whatever it is you want to do. You want to be a great tennis player. You know, there are guys that are more talented maybe than McEnroe or something like that. Maybe his brother, they say, was more talented, but McEnroe worked at it. McEnroe loved it. I guess he was obsessive. He worked all the time. I mean, if you think about any of these
brains
guys,
is not enough. Talent's not enough.
Talent's
right?
not
It's
enough.
the
You
drive.
gotta do both.
Well, you had this great options business, and when did you start thinking about not just being an investor, but somebody who
Well, I
could
wasn't an
create
investor. I had this big following. And so I got the money. I had an uncle that had some money, and I, by that time, had saved a couple of $100,000. You could buy a seat for $400. He loaned me $200, so I had enough without borrowing. I didn't go to borrow that, so we had $600. And the interesting thing, when we worked out the numbers, I never forget, my uncle's accountant said, "You're crazy to do this. You're making yourself $500,000-600,000 a year. No matter how you do this, with the income you're going to make from the commissions, but you got your own seat now. You got to have accountants. You got to have lawyers. You got to have overhead. There's no way you can make a penny." And he told my uncle, he said to him, "Look, you want to loan him $200, you're not going to lose it. He's putting up, his $200, and the way it's structured, you really won't lose." And I had, I was paying my uncle a real good return on the money plus a piece of the company. But I did it anyway. I said, forget it. I'm going to have my own firm. I realized then, in those days, in '68, '69, these guys that did arbitrage, there were only a few German Jewish firms, literally, like Goldman Sachs and something, that did this arbitrage.
King Loeb.
Loeb actually didn't do it that much. They did merger arbitrage. But I'm talking bona fide. I couldn't afford merger arbitrage. I couldn't afford to figure one company will take over another. That's what they did. But this stuff was sort of arcane. It was mathematical. You bought a convertible bond.
This is the Gus Levy era of Goldman
Gus Levy
Sachs,
did some of it. Goldman did it. And a few German, and you made a fortune from it because you didn't have to put up any real money. See, we cleared with low roads, actually. And all I had to do is put up like 10% because I'm buying a convertible bond and I'm shorting the stock.
Right, exactly.
Right? You can't lose literally. I mean, I'm making it more simple than it is, but you really couldn't lose. So you keep building up that position with the hope that one day the market crashes. And if it crashes, the convertible bond that converts into the stock is now a bond. It doesn't go down as low and fast as the stock.
Right,
and if the stock falls down, gets killed, you make a fortune. And I hit with it a number of times.
When did you start taking the outside money?
That was, we had an option writers fund then. And we always did very well for everybody. The arbitrage thing was making me literally, and I was the only guy that could put it together with options. So I short it, go long it. You couldn't lose if it went down, you made a lot. If it went up, you sort of broke even. But if I did options, I made a lot on the upside. So I gave up the option business. I gave it to my assistants. I had two guys went over with me. They had a little piece of the business those days. I said, you keep that, and they both were making a lot of income from it. It pays to be ethical. I found over my life, I had a code that I lived by. You can laugh, but I had my own code. And I had a following then
What's
too.
the code? Tell us the code.
Well, the code is, one part of the code, I mean, there's a few things. But one part of the code to me, and I had it inculcated for some reason, that if somebody gives you money to manage, you owe them your fealty, meaning you owe them loyalty, and that's how we built the option business. I was giving them an extra $1,000.
It's part of the trust. You know, they're entrusting with you something dear to themselves.
Yeah, but what it was happening in the history, so I had these two guys, they owned a piece of the firm. You know, I don't remember how much, maybe 20%, firm 25%. And the reason they left me was they had a following in the options. We had all this. And it was maybe 72, you guys, you were too young. But anyway, in 72, the market was hot. You know,
Right.
the same as it is today. New issues going crazy. And all
Nifty
these
50.
The Nifty
50,
50,
yeah.
Crazy
The
multiples.
Nifty 50 back in the 70s, right?
in the 70s.
Yep.
And these little companies were going out. There were firms that F.L. Solomon we were very friendly with. I mean, there were a bunch of these firms making a fortune. My two guys were making great money. I mean, frankly, they would have made it if I weren't there. But they were doing much better than they ever thought they would do. You know, they were living in Queens. They moved out to a nice place in New Jersey, wherever the hell they moved. But the thing is, especially one of them, was pushing like hell to do underwritings. Because we could do it underwriting. You know, this little dinky company, get into the underwriting group, and we had this big following, and we would buy a lot and make all the
Underwriting
fees, which were huge.
Sure.
And these guys would have really benefited. I said, I'm not doing it. Because I'd look at the companies. So when you look at the companies, you said, how the hell can you sell somebody a company that makes plumbing fixtures and give them 40 times earnings for it? Oh, well, you got to understand, they got a new fixture. I said, let's look at the new fixture.
Right.
Let me talk to some guy that understands that. You talk to a guy that understood, I'm just giving you an example. Let me understand the new fixture. The guy laughing at you, this is ridiculous. Oh, but they say it's great. They say, forget it. So well, one of them said, well, I'm leaving the firm then. I said, God bless you, leave the firm. I got the stock back from the guy. Yeah. And I didn't do it for that reason. And then the other guy left eventually, so I own the whole firm. You know, I've always found after that, I know it sounds cynical, but you have a choice if you're going into a business. You can have partners or you can have money. So somebody can give you money and take a little piece. Other partner is going to work for you. I always took the money.
We'll be right. We are back with the legendary investor, Carl Icahn. Take us through 70s, 80s, 90s. You're running money for outside people. You're making your own money.
I was doing arbitrage and options, and we built a great record, I mean, then, and made millions of dollars. The CBOE opened up, if you remember. And for a while, it was perfect. It was great, because they didn't have puts. Once they started the puts and the computers came on, you couldn't make riskless money like I was making. And I didn't like that. I didn't like, I never did merger arbitrage, very little. I mean, everybody did a little bit. So I was looking for something else. It came to my attention that activism, or what you call it whatever you want, Raider activism, I haven't changed, the name's changed, because they now find out that what we've done is good for everybody, and you made billions for things, so they tell you, oh, well, Icahn changed. I didn't change, they changed, so it's that criticized. You look at a company, and we look at the beginning, and you'd study it, and again, you know, I'd spend 5 hours a night till 2 in the morning looking for companies. And you look at them and say, this company is amazingly cheap. It's got great assets. It was easy to do with that. Great assets, but they're not making any money. And then you look and say, why don't you make money? And you'd start talking to guys that understood the company better than I did. You know, an analyst, he said, the reason, Carl, is that it's not great and doesn't have great name, great this. It's the guy that runs it's an idiot. And you just shouldn't be there. So I said, why can't we get rid of him? So they said, well, how are you going to get rid of him? There's no accountability in that company.
Clubby board,
they're all buddies. We make money for all the shares by cleaning the company up and getting on the board or whatever reason. and saying you got to do this, this, and this. And if you're a smart guy, even the guys on the board sort of know what they should be doing. But hey, you got a guy in there, and that, I wouldn't go into my metaphor for how these guys get there. There are some very, very good CEOs.
You've done a great job over the years explaining how those boards work.
How that boards work.
Yes.
Hey, you want to make it clear for this program anywhere that there are very good CEOs I respect greatly. I mean, Tim Cook is a great CEO. The most important thing in a company is the CEO, by far.
Sets the culture and sets the leadership.
And while I don't believe they should get 750 times what the average worker gets, I don't begrudge him that money if the stock goes way up.
Yeah.
Because if he gets the stock up, let him have some good money. But look what you have. You got this clubby system, and you know what? A lot of them feel they can do what they want.
Let's
Look at the
shift
facts
gears
here.
a little bit and talk a little bit about the economy. The economic data is lackluster. The stock market is zooming. The Federal Reserve seems like they're out of room and will likely raise rates at some point, Carl. But what's your thoughts on the way everything is? I mean, you've got 50, 60 years of investing.
Well, it's not a popular thing to say, but I think it's very dangerous.
You called it casino earlier. You said a lot of people think that investing is like going to a casino.
But what's dangerous about it right now?
The whole, right now, no matter what, you're in a very, very dangerous time. A lot of people disagree with what I'm saying.
Well,
some
give the
do.
reasons why we're in
Hey,
danger.
look, this interest rate at zero.
Right.
It's not that simple just to go in and just say we're going to make it zero interest rates, which of course is a great advantage to a company to borrow money at next to nothing. I mean, you could look at stuff. It's a great time to do a merger and acquisition. So for a while that works and makes you money. But look at the results today. Earnings are down 2%, 3%, 4%.
Yeah.
The ad dollar is high, which
Strength of
costs
the dollar,
which costs you earnings. The numbers aren't coming in my mind, that great. But I will tell you
You
that
see a correction coming? Are you hedged for a correction?
Yeah, I'm really hedged.
So what do you hedge? You hedge on the index
Yeah,
options?
you're making a good point. It's difficult to really do a great job hedging because we got these long positions. And I tell you, there's ways to hedge, and this is where you do these derivatives. And it gets a little arcane, but what I really think is that's what's even more dangerous than the actual stock market is the high yield market. In other words, the junk bond market. It's ridiculously high for a couple of reasons. I think default rates are going to go up in this market.
Spreads are going to widen.
And people buy it. I mean, this is what I'm talking about. The public.
Well, they're chasing the yield.
Well,
I'm going to try to put stuff out to tell the public what they should be aware of. They're buying the yield. So you see all these high yield funds. Money keeps going into them because you think, oh, the bonds are going to go up. When they start coming down, there's going to be a great run to the exits. And what is even worse is that even in 08, where, by the way, we made a lot of money doing just what I'm going to tell you I'm doing now. But in 08 even, you had a bit of a safety net because of the prop desks at banks. Today with the Volcker rule, you can't even make that investment.
Absolutely.
So there's no catching it. When these guys and these funds
Get
start
redemptions.
running out,
And a lot of 401k money is in these high yield bonds.
and it's sad. I mean, in pension funds, high yields shouldn't be at the level they're at. The high yield market going at interest rates only 3% against Treasury, above Treasuries. The spread, the credit spread is way too narrow.
They were called high yield bonds, junk bonds, for a reason.
What else are you worried about, Carl? The pension funds?
Yeah, but the pension funds, they're undercapitalized, underinvested, but what if the market does really crash? I mean, people say it can't happen, and it's not going to happen. You're not going to have 08 again. I remember in 07, I mean, it's very similar. It's like deja vu. I was very concerned in 07. And the irony is that in 07, just like now, people all knew the housing bubble was going to burst. But everybody was thinking, well, wait a year, give it 6 months.
There was a Citigroup cliche about we're going to dance until
Yeah, well, wait. But wait, you
dancing.
can't wait. You
It
can't
really-
wait because when the music stops, you can't just say I'm getting out of here
so you
because
really
there's no exit.
You feel a lot of similarities.
You
Yeah,
feel
I do.
15 is an 08?
Well, I'm not going to tell you it's going to be 08.
What about
I'm
16?
not saying it's. I can't predict year to year. I think anybody that does is a fool. You can't really say I'm worried about next month or even next year. But you worry about the system and what's going on. And and then you say, well, what's going to really crash it like '08? You know, I remember in '07, again, at risk of being modest, in 4 days in '08, we made $1.5 billion because we put on those credit spreads, and we made it on a couple of $100 million invested because we had those credit spreads on. And I think they're right there again.
Are you hedging out the long portfolios by being short the junk market?
What I do is arcane. It's an arcane way of doing it.
But you're doing
you
it
put
through
on a credit
derivatives.
spread. You
Right.
do it. You buy CDS.
Correct.
You buy insurance in a way, and it's a little complicated because it's not hard to do it, but it's very hard to explain it.
We'll be right back. We are back with the legendary investor, Carl Icahn.
Well, Carl, you mentioned Tim Cook, so you brought it up. You said Tim Cook is a good CEO, so I guess we should get that on the record. You're happy with Tim Cook right now? Think he's done the right
Well,
thing?
not right now. When we first bought it 2 years ago,
2013, you called it a no-brainer.
we
You just
called
said
it a no-brainer,
You said it was
and
a
we went
no-brainer.
on Twitter and said it, and I
Yeah.
very rarely do that. And I met Tim Cook because at that time, there were guys calling me and saying, hey, we got to get rid of this Tim Cook.
Right.
And I met him, and I said, this guy's great. I had dinner with him.
And
up to
Steve
my
Jobs
apartment.
put him in the-
and you got to learn to have a feel for people.
Yep.
I said, the guy's a great guy.
What was the gut feel? You met him?
The gut
the
feel,
impression
you
was
just
what?
meet with the guy, and after you talk to him, the way he came out talking to me at that dinner was, this guy, he lives this, he breathes it,
Heart's
he's
in the right
obsessed
place.
with
Same
it.
way you are.
Yeah,
He
a little bit
looks,
like me.
He looks at the Apple
He
products
lives
the
this
same
thing.
way you looked at the options book when you
Yeah.
were running that options book.
Yeah, and he breathes it, and after you meet with him, guy said, you're not going to find a better guy.
So the stock,
Yeah.
apologize for looking down. I want to get the actual
Yeah.
numbers right. So when you first put that tweet out, 2013, the stock is up 96% since then.
And we haven't sold a share, and in fact, bought more
That's
on the way
creating,
up.
that's
And you
creating
like,
a lot
and
of
you like it
shareholder
right
value.
now. You tweeted out recently. You like it right now.
I think, listen, I can't tell you when a stock is up a lot, even though it's going at such a low multiple. It's amazing how low. I mean, how do you
It's probably
justify
the size. The market
S&P?
cap is probably hanging the multiple a little bit.
A little bit, and how do you justify the S&P going at 18 times earnings,
Yeah.
losing 2% in earnings, negative? These guys are talking about, I forgot, 30% increase.
Yep, $200 billion in cash.
And when you take the cash out, it's 11 times earnings. It's absurdity. And I think it's one of the, every 50 years you get a company like this that has everything going for it. It's like the old horse. I remember Secretariat went into Belmont by 30 lengths. By 30
73,
lengths, right?
73,
Yeah, remember?
73,
30
yeah.
lengths.
Yep.
I went around and I bet in every little parlor on it, $2, $5. But I tell you something, that this is like Secretariat. Now, hey, can something happen? Yeah. I mean, look, this is not a game where you can't lose. And I'm not telling you Apple can't go down 30 points either. I mean, this happens.
You're just
Go
talking
up
about
and
the
down.
fundamentals
Listen,
as a long-term investor.
since 2013, it hasn't been a straight line up, but the
Never
company's
been,
delivered.
that's
Are you
right.
happy right now with the mix of capital allocation, the buyback, the growth?
Well, I'd always like to see bigger buybacks.
Let me ask you about a company. When I was going back to look at Apple and when you first got involved with Apple, and you probably remember, there was a lot of criticism in the media. The media actually said, what does Carl Icahn know about technology? He'd never been successful in technology. At the same time, another great investor, a legendary investor, Warren Buffett, had taken this huge position in IBM, a stock that at the same time period is now down close to 10%, and they have bought back huge amounts of stock. Why is it that the media will get behind something like Buffett and IBM and say that this is the greatest thing, and then they'll say when Carl gets involved and he tries to change things at Apple, you get criticized? What is that all about?
But I don't believe in micromanaging a company.
Right.
We own 20 companies we control. We go in for the big picture. In other words, we will, if they need capital, we get it for them. If they want to go here, I come up with the big ideas. I am not a micromanager, nor do I think I'm a great guy in technology. But the difference, I think, with Apple was that a lot of people, and still do to this day, just misunderstand the company. They are so inculcated in the fact that, hey, Apple is a hardware company, and they don't deserve a multiple. And in fact, they're going to get tremendous competition. But it's not a hardware company. It's a company that has built this huge ecosystem. You can't compete with Apple
But
really
again,
well.
it gets back to the active and the passive, in the sense that when you are investing in a company, you're investing in a company, the way I see it, no different than Warren Buffett. You're investing in a company, You're trying to generate long-term capital gains. Why is it that the media continues to look at somebody like yourself investing in a negative way?
I don't think that's fair to the media. I think in
So how
many
do you see it?
companies,
How do
many
you see it?
companies that we've invested in, the media has gotten very much behind us.
Okay, good. So
They were behind us in a number of companies, saying you ought to do something. I think in Navistar they were behind us.
Right.
But I don't think Apple is a good example of media not being behind you, because I think a lot of people read it wrong. In Apple, though, the stock went up about $14 billion that day or something, right? I mean, it went up a huge amount when we did it. But, you know, I don't think that's the question anymore, Gary. I don't think people say, what do we know about it? I think we're past that stage. We've made so many billions for shareholders, so many billions on billions on billions. And I mean, if I did a study once that all you had to do was buy the companies we went on the board of, and they're up annualized 28%.
We'll be right back. We are back with Carl Icahn. So, Carl, we want to play a little word association game with you.
Okay.
So we're going to say a word, and you just tell us what you think. So, how about your greatest fear?
Greatest fear, it's a good one. I don't think I have a
don't
great
really have
fear.
any fear.
I don't
That's
think.
what I love about you.
I hope that's true. I
I
can't
love
think
that.
of
I mean,
one.
that's the biggest lesson of the whole show. Go ahead.
Carl, describe a perfect day. This is a good one. A perfect day.
Well, you take a nice walk and come to the market, and you made a great deal of money, and everybody's telling you they love you, but it rarely happens. At least the last part. Maybe the first two happen, but that's
after the market closes, a good dinner.
yeah. Then have a good dinner, a couple of martinis, or at least one or two martinis.
Early to bed, or you're late?
No, late.
Late.
I stay up real late. It's the only peace I have. You know, after midnight,
Right,
it's
exactly.
quiet. Yeah, yeah.
What's your motto? Do you have a motto?
I have a couple of them, but I'd rather not say them on TV.
All right, all right. Well, how about the last question, or the last word? Let's talk about legacy.
I'd like to be able to do something to change this dysfunctional system we have, but I never quite get around to really putting the time into it because I'm too busy running the company. The system that we have in corporate America it's dysfunctional because you have no accountability. It's even worse than the political system. You can't get rid of half of these CEOs. You just can't get rid of them. Now, they're not all bad. I want to make it real clear. A lot of these guys are great. When this market does come down, which it will, I believe it will, maybe 3 days and maybe 3 years. But it's going to really come down, and then you're going to need real good people running these assets, and you don't have them. So I'd like to change that.
I want to personally thank you for the type of person you are and the role model that you've been to so many of us. If you want to watch a ticker, you know where to go. But if you want to know how the world ticks, watch Wall Street Week.
The preceding program was paid for and presented by Skybridge Media, LLC.